One thing before I jump into my presentation, on ESSER 2, I just got done answering a question this morning also. We don't have any fund codes assigned to it. We are working on finding a new fund code for it. Our list is getting shorter and shorter by the day. And so I won't be able to answer any questions on ESSER 2 other than, yes, we're working on a new fund code, and yes, it will have to be tracked separately. So that's the update I have for ESSER 2 today. All right, let's jump into a presentation. All right. So a few things I'm going to discuss, and of course, anytime along the way, feel free to put a question in chat, and I'll try to stop at the end of each topic to see if there's any chat questions that are related to that specific topic. So today, I'm going to briefly talk about the depository change that passed from HB 3, or actually it wasn't a House Bill 3, but the 86th legislation. New fund codes. Hopefully you should all be aware that there are 2 new fund codes, and I'll discuss a little bit of the accounting for that because it's got a little confusing. Then the new PIC code that we added that I want to talk about, and then House Bill 293, just a quick update on that, and then we'll jump into first and go over the indicators that are now in effect. So Senate Bill 1376 eliminated 45.208E, which was the requirement that you have to send your depository contracts to TEA. So that's slightly good news for you guys. You'll no longer have to submit that information to us. However, you do still have to submit the direct deposit information, so the VDDA form that you can get from the comptroller's office or their website. You have to submit that to us through Teal still, because of we need that to be able to process the payments. We will also provide the bid and the proposal forms for you. Those are in rule, and they did not remove those. And then for the charter schools, there was no changes to what you submit to us, so you will continue to submit your depository information to us. Short. All right, no chats. All right, so now we're going to jump into fund codes. So 266, hopefully you're all aware of, and if you did use it or utilize it for 1920, it should be live in PEEM, so you should be able to submit your 266 fund information in that specific fund. If not, then let me know so that I can circle back with PEEMs, but that was supposed to be available for use for the 1920 school year. And what Fund 266 was your ESSER's funds. That's what we used it for. It was similar to if you remember way back when we had ARA, it was similar to the ARA funds. And so with the way ARA funds were being used, we just assigned it Fund 266. And we could just barely use that because we got out of the time period that we have. I'll call it a cooling off period for funds when they're no longer in use. And then Fund 277, this is your coronavirus relief funds. And this had several funding streams, the TDM reimbursement program, any of the operation connectivities that you took advantage of. And then even if your city or county had a local match, you would use Fund 277 for that. So I wanted to provide an example of the accounting specifically for CRF funds, because of the way that you were having to account for those. And then information that TEA had originally put out, and then I got some clarifications from GASB, so then we had to change it again. And so I'm trying to talk about this as much as I can so that you guys have the best information available and can make those changes if need be. So for the 1920 school year, let's say you recorded your CRF funds or your expenditures in 1920. So these are your March through May expenditures. We told you to track those locally. And if you remember, we didn't have Fund 277 at that point. And so it wasn't available for the 1920 school year. It is available now for the 2021 school year, but it's not available for 1920. So now you're starting to get the revenue or the reimbursement for those, or you would have already gotten it. You'll record that in Fund 199. So you had your expenditures in 1920 recorded in Fund 199, and now you'll record that revenue in Fund 199. And then this will be a reconciling item on your CFA for the 2021 school year. But you'll still have to keep the documentation from the 1920 to support those expenditures as your auditor will be working through those. And then just a couple of more clarifications, just so that we continue to hit home the accounting for it. You'll record the reimbursement in 2021 in the fund that expended it in the prior year in 1920. And then so I give the example of the general fund again, then the receipt of those funds must go in Fund 199. And then that last sentence, you cannot record the revenue in 277 and transfer or move prior year expenditures into the current fiscal year. That was some guidance that we had provided early on before we talked to GASB. So we have struck that from our FAQ. And so I wanted to make it clear that the previous ways that we have told you, so you can't record the revenue in 277 and then transfer it over back to the general fund. You'll just record that revenue in the general fund. And then the bottom bullet point just says that you can only move expenses in the same year. So if you had expenses in 199 for the 2021 year, they could be used for reimbursement from the CRF, then you could move those expenditures into 277 at that point. And then the last part just tells you how you would do that. And then I just have a few questions that we were getting that were fairly common, and so we wanted just to make sure that you guys had that information available. So the first question talks about the timing of the two funds, so Fund 266 and 277. And if they're claiming reimbursements for the 1920 transactions in the general fund, will we need to record a receivable and revenue for the amount of those expenditures to be in compliance with GAAP? And then also, how would you record the transactions on the 1920 CFA? And then question 2 is, if Fund Codes 266 and 277 are not available for use in 1920, how should they be recording the revenue and receivable in the general fund, and recording revenue in fiscal year 2021 for 1920 expenditures allow for proper matching of revenues? And would we encounter issues recording these expenditures on our CFA? Final one is, how are districts recording their county and or city care funds? So the answer for Fund 266, which is the ESSERS, the district received the notice of the grant award in early summer. I think it was in May or June. So that's the end of your fiscal year 20. And then it was also an offset to revenue for 1920. Therefore, that allowed for you to record the revenue and the receivable to match those expenditures if you used your 1920 expenditures with ESSERS. There were some districts that I were hearing at the end, they chose to not use the the ESSERs to do anything for 1920. They were in fact carrying the ESSERs forward, and we're going to use it in the 2020-21 school year. And then GASB contemplated this and some of their implementation guidance that they submitted or sent out, and it confirms that if you don't have an executed grant agreement before the end of a reporting period, the governmental entity cannot establish that it has incurred allowable cost. And so that's kind of pointing to the use of 277 in 1920, that you couldn't record a revenue because you didn't have an executed grant agreement. And then also for Fund 277, those funds weren't available until October, so therefore you can't accrue the revenue. It's outside the time frame. And then you'd record the expenditures in Fund 199. You would use a local option code, or you could have used a local fund code to track those expenditures, similar to what some of you may have had to do for FEMA at one time, and then record them in the CFA as a reconciling item in 2021. And then record the receipt of the funds in 199 at the end of 2021. And then anything for Fund 277 that you have now can be utilized for the current year. And then the bottom slide is just a snip of a slide that I got from the AICPA Government Audit Quality Center. They did a presentation, and they also talked about the difficulty in this past year of matching revenues and expenditures. And then on the object codes, you can see that there's 4 of them there. They're all federal. And what I'm trying to do is just illustrate for you guys that you're getting funds from several different entities, not just TEA. And so as you receive those funds for the different CARES Act, these are the fund codes or object codes that you'll use to record that revenue. So 5919, if you did get some kind of match from your city or county, then that's where you would record those funds, is the 5919. Of course, you're all familiar with 5929. 5939, if you received funds from another state agency, then you would record the revenue there. Some of you may have received the SHARS money that they had sent out, and I'm sorry, the title of the federal grant escapes me right now, but you would record those in 5939, and then if you received any funds from the federal government, then you'd use 5949. All right. Let's see on the chat. Oops. Now there. It's not letting me bring up the chat. Try again. All right, we'll try. All right, well, for some reason, I can't see the chat. So if Connie, if you want to read those questions to me.
Okay.
Sorry to put you on the spot.
And that's okay. Actually, we're good. No question.
Okay. Yeah. All right. So we're moving into program intent codes. There was a specific program intent code I wanted to discuss. I've talked about it a few times, but I'll want to make sure that I can provide some clarity on it and its use. And that new PIC code is PIC 43. We did send out a TAA early summer, and so to describe what it is. And what it is it's we titled it Dyslexia Special Ed Services. So many of you know that you receive a state allotment of dyslexia funds now. And we originally created PIC 37 for that fund code, or for that PIC. But that was creating an issue with the special education services because you had to spend 100% for state compliance of the dyslexia allotment. But if you used it for special education, then you may have wanted to code those expenditures using the dyslexia allotment in PIC 23. But because of the 100% spend requirement for state, then you kind of came into a conflict of, well, which area do I put that in? And then the other piece that was making that difficult was the indirect cost calculation wasn't picking up PIC 37. They were picking up PIC 23 and oh, I'm sorry, MOE calculation, not your indirect cost. And so there was a conflict on how to use that. So what we decided to do was create this PIC 43 for dyslexia special ed services, hence the 43 and 23 to try to make that easier for you guys. And then also if you think about your PIC 33, which is pre-K special ed services. So sometimes you can see a pattern with those ending numbers. If we can't group the PICs together, then we try to do some relationship. So to help you guys whenever you're having to code those expenditures. So we will combine PIC 43 and PIC 37 for the state allotment, knowing that some of those dyslexia services that you're providing are for special education students. And so if that's the case, then you would use those in PIC 43. And then along those lines for MOE purposes, they're going to also utilize PIC 43 whenever they're doing your MOE calculation. So you'll want to make sure that those expenditures that you put in PIC 43 are in fact for special education students, so that whenever they get combined with MOE, there won't be any kind of reporting problems. And then on the flip side, if you don't use any, you don't have to use PIC 43. If you're not providing any dyslexia services to special ed students with the dyslexia allotment. So, in some cases, you may have provided, you may have utilized the special ed service, special education allotment for some of those services if it was written in the student's IEP. And so you may have used the money there, or you just didn't code it to PIC 43 and you only used PIC 37. And then so PIC 37 or 43 is effective for this 2021 school year. And then the second to last one, we sent out a TAA about it. So if you follow that link, it will take you to that TAA. All right, and then also within the PICs that I wanted to talk about, there is a new audit requirement. I'm sorry, guys. There's a new audit requirement for comp ed and bilingual. And I shared this with the auditors back in June at the Texas School District Accounting and Auditing Conference. And so they now have an awareness of it, but at that time I didn't have the details that I have today. So I'll briefly go through the slide, and then I wanted to show you what we are proposing for the audit procedures, and then what the schedule will look like that goes in your audit. So what HB3 did for these two particular programs, once again, it's comp ed and bilingual. During your audit, they're asking for the auditor to perform some procedures for compliance purposes for your audit. And then it also said that because it's going in your audit report, the SBOE has to put in some minimum standards of what should be in the audit report. And then it tells the commissioner that we have to review those. And then also on spending requirement question, this is, I probably answer this question 2 or 3 times a week. And so as I go around, I like to share the information for flexibility purposes, starting even before COVID hit. We've been telling people that if they don't spend the required amount this year, So it would have been the 1920, and now we're even to the 2021 year. The expectation is that you'll spend the amount you did not spend plus the amount that you're currently receiving in the current year. So my example, if your allotment was $100, you were required to spend $55 on the program, and you only spent 45. Then the following year, whatever your new allotment is, you would have to spend the 55% of the new allotment with $10 plus the $10 of carryover from the previous year. And then also in HB3, it did provide the agency, whenever we're reviewing you for compliance, a 3-year averaging, so that we can look at that over a 3-year period. And that way, some of these ebbs and flows that are happening, especially with the changes with HB3, we'll be able to take those in consideration. And then I'm going to try to change my share if I can to, let's do the use funds. So hopefully you guys can see that. And so what this schedule is it is going to be the schedule that will be in your audit report. So you'll go through a few of these lines and enter this information in. And be aware, right now we're actually next week we have our state board meeting, and so I'll be proposing the new resource guide to the state board. It is for first reading and filing authorization, which means that in February it'll be out for public comments. And what we've tried to do this time around is provide a change document, so that way you can quickly go through the change document and see the changes that we're making to the resource guide without having to dig into the individual modules of the resource guide and trying to pick out all of those changes. So hopefully that's helpful. That's something that we've done with the Student Attendance Accounting Handbook for many years, and so we're now applying that to the resource guide, which even with that and our new shortened resource guide, I think our change document is still over 60 pages. So this is a schedule you'll have to do for both comp ed and bilingual, and it just has a few questions about what will be included in your audit report. And so based on comments that we get, some of this may change some. So I encourage you guys to go and look at that and check that out. And I'll give you a minute to look at the bilingual one.
David, you got a thanks for that, David.
Oh, okay.
That is helpful. So I'm sure the whole group feels that way.
All right, now I'm going to share my second document with you guys. Oops. And let's find the next one. All right, so this is how it's going to look in the resource guide when you go out there. And actually, you can see this is an audit module 4. And this is for comp ed. And so all of this has been struck from it where you see the crossed out lines. But if you scroll down, and this is so in audit module 4, we have the state compliance information that your auditors follow whenever they're out there doing your audit. And we're adding these two program procedures to that module. And so this is what it looks like right now, as if you were to go out and look at it in the rulemaking documents. This is what you would see. And so everything underlined is all new information. And then you can see for FSP, if we get down here, determine the expenditures were in alignment, the other state allotments, attributed program and services. And then you can see here for Comp Ed, the specific procedures. So we want to make sure that you've developed your district and campus improvement plans and tie that back with what Module 6 says. And then if you utilize your local eligibility criteria, we want them to perform some procedures on that. And then review methodologies used for identifying eligible students and exiting students to ensure that they align with the guidance in Module 6. And so, you know, this year with determining the economically disadvantaged students and then going through your census block groups, we want the auditors to kind of look at your procedures over that, just to make sure that you have good controls over that. And then for the bilingual program, if you use the waiver, then you followed the waiver guidance. And then once again, the methodologies. So we want them to look at how you're identifying students and that they're following the guidelines and education code. And that's it for that. So that's the programs. If you go out to our website in February, then those documents will be out there and you'll be able to spend a little longer with them, but I want to make sure that I get to first. All right, House Bill 293, it's very short. I may have, trying to remember if I went to y'all's, if I made it out there before all this craziness happened or not. I may not have, but so another bill had changed Government Code 2256.008. And basically, if you are a district, I'm reading in the middle bullet point, if you're a district that does not invest district funds or the only deposits you have are in interest-bearing deposit accounts or CDs, then you no longer have to do the Public Investment Funds Act training, but you do have to annually submit a affidavit to us that your district only holds those two types of savings mechanisms. And then in November of 2019, we did send a letter out about it. On our website, we've added a sample statement for you guys to be able to use if that's helpful for you, or you can come up with your own. You will have to submit it through the audit system. So the same way you submit your AFR, you'll have to submit it through there. And then we also tried to align the due dates to something simple. It didn't have a due date in it, but we provided the November 27th and January 28th due date because most of you guys are well aware of those two dates based on your fiscal year. So we were trying to make that as easy as possible for you to be able to remember those due dates. And then if you have any questions, you can email that email address and someone would be able to help you. So good news for any district who does not have or only has a savings account or CDs. The most common question I get is tax pools or any of the pools, are they included in that? And the answer is no. If you're in a pool, that's considered an investment. And so you still have to continue with the investment training. All right, updates on FIRST. First, let's look at the last 3 years and how districts scored. You can see that the overall, if you look at it, districts have done fairly well. Lots of A's. the B's and C's since that 17-18 year have decreased. And then you can see, oops. Normally, if I say his trigger word, which is Gatsby, then he gets excited. But for some reason today, he's gotten excited. Sorry about that.
See, David, that's the good thing about cats. They're usually quiet.
Yeah, he's been quiet this whole time, and then I don't know. There's another dog that starts barking that gets him all excited. Sorry about that.
No worries.
And so we did see a little uptick in the fails this year, but a decrease from 18-19. So our first change, as we're discussing these changes, you can see that in order to meet a C, we've increased the requirements to a 70. So no longer receiving a 60 will be passing. You'll have to receive at least a 70 to be passing. The first 5 are critical indicators. They're all ones that you're used to seeing. So did you submit your audit on time? And on time is within 30 days of your due date. So the November 27th and January 28th due dates. And that also includes your data feed. And then indicator 2, you had an unmodified opinion in the AFR. So a clean opinion gets you a pass. If you have anything other than that, then you'll fail. Monetary default on debt. That's the same question that we've had for a number of years. And if you paid all of your debt agreements on time, then you'll pass this indicator. And then there are a few technical defaults that you can get that don't actually make you fail, but we actually haven't had any questions on those. So, and then indicator 4, you're paying the TRS, the governmental entities. I'll talk a little bit about that when we get to that question. And then we will have a little more discussion on indicator 5, just because of the difficulty it's been for us these last few years on scoring that. Also, what I want to bring up for indicator 1, if you were a June 30th fiscal year for this year, and the first time that I am aware, we gave an extension because of the complications that COVID and the pandemic were creating for school districts. And so we extended the June 30s to a deadline of January 28th. So if you're a June 30, you received the waiver and you had to request that waiver before your audit was due, you got an extension to January 28th. So if you're listening to me and you got the extension, then be prepared to submit your audit by the January 28th deadline. And then for the January 28th, we haven't provided any kind of waiver information for the extensions. And so, or we haven't provided any extensions for the January 28th deadline, but I have reminded auditors and school districts as they're responding to us that they have until February 27th to submit their AFR to us, and without having any penalties in first. And then I also wanted to note that in Paul Moreno, who's one of my managers, they review the AFRs, and him and I are in discussions on how we want to word, because we do have a paragraph that you did not file your audit within the statutorily required deadline. And so we're trying to figure out how we can soften that language for this year. still including it, but giving it a softer voice than what it sounds, especially because of everything that's going on. And then I just had a meeting before this presentation, and so it's fresh in my mind. So I wanted to, since I have an ear of some of y'all, I wanted to let you know that the PEMS requirements haven't changed. So you still have to submit your data to PEMS for mid-year in the deadlines that are set. And I think your first one is going to be the same day as your audit is due. And then resubmission, I think, is February 11th. And so we did not change and have not changed anything with related to PEMS. This is specifically an audit requirement only.
In the comments, we did have or in the chat, we do have at least a couple of districts that did ask for that waiver, so.
Okay. And then I mentioned the audit opinion. If y'all remember, we also had a material weakness as part of this question before this go around, and that one has since moved to its own question. And this is the audit report that is at the front of your audited statements. I discussed this one. There wasn't any changes to it. I did want to talk about this one because we've made a couple of tweaks to it. Some before, but not everybody remembers that we've made those changes. And then also because there's an additional change to it that we've made with the new implementation of these indicators. The first change is, so the question is that you pay the government entities on time, and then we have them listed. And then the change that we've made is we've tried to align the IRS side with the warrant hold side. So in years past, we've always given you the benefit of clearing a warrant hold within 30 days. That would, if you cleared it within 30 days, then you would still pass this indicator. The IRS side, there have been districts that have failed in the past because of missing payments to the IRS, and some of them have been 5-10 days after the fact, but they still paid them late. And so we tried to provide that same flexibility with the IRS, and I did share this with the auditors that attend the audit conference, that now you have 30 days to also clear up any of those IRS payments that you may have missed. And then the middle paragraph there, the change that is taking place this time, that if you do have to use or have those 30 days of warrant hold, or you paid your IRS payment late, but it was within the 30 days, then you'll still pass this indicator, but you will lose 5 points. So the highest score you'll be able to receive on first, if everything else is perfect, is a 95 if you did pay one of those entities late within that 30-day period. All right, indicator 5. I would say you should ignore this slide, except for the fact that we may move this into a different, just another indicator. So it'll be 5 or 10 points. We haven't made that determination yet. So because of the difficulties we've had with this indicator for 2 years, we're no longer going to have this as a critical indicator. It may move to a point range indicator, or we may scrap it all together, but want to make you aware that this indicator is going away. And so we are exploring other indicators, and through the help of my accounting advisory committee, and Connie sits on that, and so she gets to provide feedback for all kinds of things that we bring them. I wanted to share with you the 2 new ones that we were considering. And so if anybody has any feedback, please submit those either to Connie, and then Connie can send them to me, or you can send them directly to me. But I wanted just to give y'all a brief glance of what the indicators are doing. And so I only pulled up you guys because that's probably the most interesting on how you would fare on this. And so this is your restricted net position object codes that we're using, your unrestricted net position object codes. And then we get into OPEB, or I'm sorry, NPL and OPEB and your cabs. So naturally we will back those out again. And then we compare that with your total assets and we come up with a ratio. So in all fairness, let's see, this is a net worth ratio. So this one was voted one of the higher ones, so that everybody can maybe hurry and pick out theirs that are in region 1 that are on the call. So if I will assume I will hear from Weslaco that they absolutely hate this indicator because of this failing score. We are using slightly old data, so we're not using the most current data that you guys have to be able to score these indicators. But we go through this process of looking at indicators and what the purpose of the indicator is, and the ratios and what it tells us. And then we also look at the impact that it's going to have on school districts. So with that said, that's this particular indicator, and I can't share this document with you. This is our own internal working document that we use. So, but I did want to bring it up and let you guys have a look at it and see it that way. And then the other one we were considering is the continuing services ratio. So it's there, you can see that they're still similar, that we're using government-wide statements because we feel like they are an important statement, even though many people don't look at those. Many boards, school boards across the state don't pay attention to those, but we think they're important, and GASB has also told us that they think they're important. Just as a side note, GASB is working through a new set of financial statements that are going to replace your governmental. So they are looking at changing those financial statements, also revamping the MD&A. So there'll be note changes as well. I suspect if any of you folks are close to retiring, that it may end up just going ahead and making that decision easier for you if you don't want to rework your financial statements. And then in this one, in this particular indicator, so we're still using unrestricted like we do in indicator 5. We still have to back out these 3 items, just as we have been. And then we're going to compare that with your total expenditures. And then we come up with your ratio, and then how you score on that. And so on this one, Progresso, you can see that you fail this one, but you're really close to passing. And so maybe with your current numbers, if you've increased your unrestricted net assets, then chances are that you'll end up passing this one. So this is kind of a look at all of the region 1s for that. And if I didn't spend my time long enough on your district, I'm sorry. Really, the purpose was so that you could see kind of the indicators that we're thinking about replacing indicator 5 with, so they would be a critical indicator going into the future. All right. And let's go back to my presentation. All right, so that was a lot for indicator 5. The next group of indicators are all solvency-based indicators. So you can see that it's mainly financial information. And then at the very bottom, we still look at your student to staff ratio. And most of, I know for 100%, I know I've showed you these at least once, if not twice, maybe even 3 times as we've tried to work through this. And you know, some of the early ones were proposed, or even ones we were thinking of, similar to what I just did with that the previous indicator. And so most of these you should be aware with, and then I've talked about them since we've adopted them for sure. So I'll go through them kind of quick. Indicator 6 is new, and it's going to look at your fund balance over 3 years. And if you have a large decrease, then the second part of the calculation, we look at the assigned and unassigned fund balance of your current year, and we'll compare that to the operational expenditures. And if you remember, when we say operational expenditures, we back out the function 81. And so we'll divide your operational expenditures by 365, multiply that by 75, and then compare your assigned and unassigned fund balance to that. If you fail this indicator, it is a ceiling. So the highest score you'll be able to get is an 89. And basically failing is having a large decrease that's more than 25% over a 3-year period, and having a current year unassigned and assigned fund balance that is less than 75 days of your operational expenditures. And then that's the formula, just to give you guys some what the formula looks like. I'll take this time to plug Amanda's template that she has on TASBO's website. She's always tweaking it and trying to improve it. And so we have a link on it on my webpage as well. So I encourage you guys to use that, especially if you submitted your audit or you're close to submitting your audit. You may want to look at that and see where the expectation is that how you'll score on first. It's not official, but it should give you a good idea of how you will look for first. Indicator 7 is the number of days of cash on hand. We didn't make any changes to this, and so we'll go through it pretty quick. If you have more than 90 days, then you're still will receive 10 points. Current assets to current liabilities. This is another one that we didn't make any changes to. It is on the A1, so your government-wide statement. We're comparing your current assets with your current liabilities only, and then you can see the scale down there. Indicator 9, we are comparing your total revenues to your total expenditures, but we're also going to back out function 81 for this calculation. As long as it's 0 or greater, then you'll pass this indicator. If not, we do have that alternative calculation that we look back at the days of cash on hand. And if you have greater than 60 days, then you'll pass this indicator. This is a new one that we are, that's now in effect. We've talked about it for a couple of years as well. And this is your budget comparison. And the things that you need to know, we're only using your general fund budget, and we're only using revenues. So a lot of the questions I get are about the expenditure side, but in fact, this is only your revenues that we're doing a comparison for. It is over a 3-year period, and good thing, especially for this year, we're using object codes 5700 and 5800s. So your 5900s, which seem to be pretty fluid right now, with all the different streams of funding coming in from the different stimulus packages. The 5900s aren't included, so that's slightly more. The first two are slightly more stable, I'll say, but just note that we're not using the 5900s. And then the two budgets we are comparing are your fall snapshot. So your last, whatever it is in your last Friday in October, compared to the actual revenues that you collected, and that's the information that we get through PEEMS. And then this is just a sample calculation of how we were doing it. Indicator 11 is your long-term liabilities compared to total assets. Once again, it comes from the A1 worksheet, so your government-wide statement. And this one does have an alternative calculation. If you grew by 7% or more in a 5-year period, then you would pass this indicator, even if your liabilities are greater than 1 compared to your total assets. This is a brand new indicator. And so we're asking the debt per $100 of assessed property value was sufficient to support future debt payments. So we're using a few pieces of information from this to be able to make this calculation. So you can see we're using your liabilities from the A1 or the long-term liability portion. We're also using the property values from the J1. And then we're using information from Fund 599 to be able to make a calculation of your local share of your liabilities. And then you can see the ratio at the bottom. And then as I've done in years past, if you're a district that relies on the federal government or the state to help make a debt service payment, we take that in consideration with this first part of the ratio. And so you can see that we use your local share of your debt collections and compare that to your total revenues. Based on that percentage, we multiply it by the long-term liabilities, and then we compare that to your total assessed property values. The administrative cost ratio, we did not make any changes to it, but we do compare your administrative costs for 21, functions 21 and 41 compared to those that are in more of a direct teaching pipeline. So your 11, 12, 13, and 31s. And then we didn't make any changes to the ranges. We thought they were still good. Indicator 14, this is still one that you're familiar with, and this one will be interesting to look at over the next couple of years. And we're comparing a decline in the number of student to staff over 3 years, so your total enrollment to total staff. If your enrollment didn't decrease, then you'll pass this indicator, and then you can see the formulas down at the bottom. All right, so these final ones, most of these final ones are new, and so I'll point those out as we go along. This one is brand new, and once again, this is going to be an interesting one to see what the data looks like. You guys just finished doing your pupil projections for the next biennium, and as you're aware, this is what that question is using. So we're asking for your pupil projections compared to your actual average daily attendance. So whatever you submitted to us in the fall of 2018 for the 2020 school year or fiscal year, that's what we will be comparing to this time. And then for the following school years, whatever the pupil projections that you've made are what we're using. And then we did put in a range. You can see based on the size of your school district, the range that you can be within. And then this is a 5-point question. There is no change to this one except for it's moved to a ceiling indicator, and we're comparing your PEEMS general fund information to your AFR expenditure information for 199. So, and I try to stress that because sometimes there's some confusion on what we're actually looking at. And so I wanted to make sure that we're clear that it's using the data feed 199 expenditures with the PEEMS 199 expenditures by function. And it is a ceiling indicator. And if you are greater than a 3% variance, then you will fail this indicator, and the highest score you'll be able to get is an 89. This is also a new indicator. We're asking if you've had any instances of material weaknesses and internal controls over financial reporting and compliance. So this is a material weakness at the front of your audited statements. If you do have a material weakness reported, then the highest score you'll be able to get is a 79 or a C. And then this question for material noncompliance. This is material noncompliance over those the audit letters in the back of your audit. So over state, local, federal grants, contracts, laws. If you have material noncompliance, then you would lose 10 points. We've seen this a few times. If a federal grant has tripped you up and it's material, then you would fail this one. But it's one you're familiar with. You've had it. You're used to this one. This one for sure you're not used to, and it's the requirements for posting. So think of it as kind of a transparency indicator, and what we're asking for is if you posted the required financial information on your website in accordance with all of those different statutes and at the school district's fiscal year end. And one keynote I like to point out is we're pointing out financial information on your website. So there may be some other academic side that you don't have posted that you may have not known about, and we're not looking at that. This is a L1 question, so we rely on you to tell us that you have that information posted, and it is worth 5 points. And then we've provided a list, and we have a list that we continually update, and I think that TASB and TASBO may have also worked on a list as well. And then the final indicator is a board meeting to discuss property values. This one keeps changing over time. In fact, we had to make a change before we had adopted these as rule, and then HB3 came along, and so we've had to make a change to it. And I suppose that we may have to continue to kind of amend this one specific indicator, because right now we're asking for the district, if you've had discussions about property values at a board meeting within 120 days before the district adopted its budget. And so, but if you remember when we first started introducing you to this one, we talked about the lag. Well, the lag has since gone away with HB3. They changed it to the state uses current year values also. And so, what we were telling people then was to discuss how setup was going to work, how the change from using prior year to current year, how that had a specific impact on your district. Well, now we're kind of a year removed. And so what I've been telling people is to talk about now the changes, what the changes look like with the federal funds that have come in, the ESSER funds that have come in, what settle up looked like, and how you think that might impact your next year's budget. And so there's still some things that you can talk about. You maybe have to broaden past the property values unless your property values are rising and falling. You can still talk about that impact and how that is impacting your district. And then this is an indicator or an L1 question, so you'll answer it on the L1. And if you answer no to it, then you will receive a B, which is a ceiling indicator. And so the highest score you'd be able to get is an 89. One last thing for documentation purposes for this indicator, the ways that I've heard districts documenting is going as far as putting it on as an agenda item in their board meetings. And then other ways they've talked about doing some presentation during a budget workshop. And if you do that, then in one of the board books, probably the one that you're going to provide to the auditors or to TEA, is putting it in there so that you have evidence that you did have that discussion, and then you would mark the schedule L1 with that information. You'd say yes. So just frequently asked questions. Oh, I'm going to take up mine and Leo's time and some of Amanda's or Josh's. Thank you guys for your time. So one of the new indicators is looking at budget to actual revenue 199. Districts received Hurricane Harvey property value decline money at the end of 1819 without any prior notice. Will special appropriations like these be excluded when calculating this first indicator? So we are aware of your concern, as we've done with indicator 5. And then even going forward, as we've even announced, and you'll see it on this next slide. So this is another question about the unpredictability that COVID is causing. How is that going to impact certain indicators? I wanted to make sure that as we speak, that I put it in writing that we will review the indicators, even the indicators we're going to get for 2021. And we're going to look at the data, and there may be some indicators that in fact we do have to remove. And that's what this slide is saying, that we've already said for the 21-22 year. We realize that trying to predict your pupil projections, budgeting, those things were difficult this year. And so we recognize that. And so we are going to pause those indicators specifically, but the broader indicators, we will look at the data before we make any decisions on if we're going to score them or pull them out. And we've done that for indicator 5 for 2 years in a row. So it's nothing new to us now.